Okay, welcome back to another lesson. In this video, we are going to look at an exam that was tested in April 2020. This exam was tested in April 2023 and is on principles of taxation. We are going to look at question number 1 and get to see what was expected to you as a student when you are answering this kind of question. The first question, you are told, explain the tax position of a resident individual with respect to the following. Underline here. Here, we are talking about, you explain this one with respect to resident individual. Yeah, just get to understand that. This is with respect to resident individual. Yeah. So once you underline this, it will help you to solve the rest. Resident individual. Now, what is the allowed income and how is it treated when it comes to taxation of an individual? Now, when you want to tax an individual, this is an income. So we say that the gross income shall be subject. The gross income shall be subject to withholding tax. Subject withholding tax at 5%, which is not a final tax. Once you pay the withholding tax, you will still pay additional tax on the same. So, if the amount is stated at net, what you do, you gross it up. You gross it up before adding other incomes. Gross it up before adding together, before adding other incomes. In this case, we are saying that you take 100 over 95 multiplied by the net income. Yeah, the net amount. So when you are treating real income, it will be added to other incomes for the purpose of taxation. But you have to gross it up if the amount is at net. If it is at gross, you just add to other incomes. Now, what about loan received from an employer at an interest rate below the market interest rate? These ones, they are called fringe benefits. Fringe benefits are those small benefits you get from an organization. They have given you tea, they have given you credit, they have given you some facilities to use, which in other words you could have paid for them. So those are called fringe benefits. But in this case, we are having a loan which you have gotten this loan at an interest rate below the market interest rate. So when you have this kind of a loan, it becomes as an income to the company, not to you. You will pay the loan. Now what happens here is, when you receive a loan from an employer at an interest rate below the market interest rate, we are saying that when the employer provides employee with a loan, at an interest rate below the market interest rate, below the market interest rate, this is a taxable benefit on the employer. This is a taxable benefit on the employer, not employee, on the employer. The employer is required to pay fringe benefit tax. The employer is required to pay these were called fringe benefit tax. Fringe benefit tax. And for you to find the fringe benefit tax, you take 30% of the corporate rate times the market interest rate minus rate paid by the employer, then times the loan amount, times loan amount. Correct. In other words, when you receive a loan below the market interest rate, is the company gaining, not you. Next, you are told that identify 4 ways through which the government might prevent loss of revenue from import. 1. How can the government prevent loss of revenue from the import? 1. Ensuring that import declaration procedures as well as pre-shipments inspection, ensure that import declaration procedures as well as pre-shipment inspection is improved and tightened. That is the first way. In this way, the government will be able to. Now, next, another way the government can prevent loss of revenue is goods in transit. Must reach countries of destination. Countries of destinations. Countries of destination, and not converted into use in the country. In this case, by ensuring that they receive bond, that the bond charges are imported to the to be refunded. In this case, on proving that the goods have reached their destination. On proving such goods have reached their destination. Have reached their destination. Good. That is another way you can prevent revenue loss on the imports. Now, another way is you prevent collusion between custom officers. Yeah? You're saying collusion between customs officers and taxpayers should be strictly managed or policed, and that heavy penalties be imposed on offenders. Number 4, correct valuation of imports such that there is no undervaluation. So basically, those are the 4 ways you can prevent revenue loss from imports. We move on to part C. We are told that Suntex Limited is a trading business. The following is its statement of profit or loss for the year ended that 1st December 2022. We are told that the gross profit 24,220,000, gain on sale 400,000, which now gives you this one. There was something small here. When you have this gain on sale 400,000, so that the total gives you 24,620,000. Then here you have expenses as declared by the business. Here you have additional information, distribution on expenses, we have general expenses, we have legal fees. Compute adjusted taxable profit or loss for Suntex Limited for the year ended that 1st December. This is a very simple question. Now, this is what you do. We are dealing with Suntex. This is Suntex. This is a company. From the term Suntex, then we are doing what? Computation of taxable income for the period ending that 1st December 2022. We need to know how much was the correct position of this business. We begin by looking at reported net loss. Reported net loss. How much did they declare as the net loss? If you go to the income statement, the net loss is 1,210,000. From the income statement, the net loss is 1,210,000. This was the reported net loss. We add back those expenses that are not allowable but were deducted. We say add back non-allowable expenses. Non-allowable expenses. These expenses were declared so that you can get that profit or that loss. We add them back because they are not allowed. The first expense, you will get them from distribution, additional information. We are going to look at this additional information. Here, motor vehicle running expenses, those expenses they are okay. That means they are allowed because they help in the running of the business. Parking fines, if any breach of law or any disobedience, if you pay fines, they are not allowed. So the first non-allowable is parking fines of 240,000. So first non-allowable here is parking fines of 240,000. We move on. Third-party insurance is allowable expense. General expenses, subscription to trade association, that's okay. You subscribe so that you can have an organization to tax appeal to local committee. When you are appealing on matter to do with tax, that is not allowed. Yeah, when you are appealing, and then income tax arrears and penalty, this one is not allowed. Income tax. If you have an expenses for tax appeal, that one is not allowed. So we have those two expenses. That is income tax arrears and penalty. We have income tax arrears and penalties. Income tax, and that is 2.8 million, 2,080,000, 2,080,000, 2,080,000. Even tax appeal, when you appeal for tax, you have tax issues. When you cut this expense, you cannot, unless the case was you are exempted by the tax appeal tribunal. Otherwise, if you appeal for tax, those expenses you don't just, because this is like a fine. You are the one who is fighting for an issue with tax. 400,000. And we go to legal expenses. Legal expenses, payment for business operating permit, that is allowed. Defending a director in a private suit, not allowed. Private suit is not allowed. This take matter to do private issues to yourself. Private suit, that is how much? Private suit 230,000. Private suit 230,000. Then collection of outstanding debts, that's okay. You have to collect your debts when you incur expenses. Preparation for 100 years lease, you are not allowed. Preparation for 100 years, your foreign companies are allowed for 99 years. Preparation for 100 years. This one is non-allowable. 115,000. Good. I'm done with additional information. Let's go back to the question and check other non-allowable. Director remuneration allowed. Distribution expense allowed. Custom duty. This is not allowed. Custom duty. Custom duty is not allowed. You don't deduct taxes here. Custom duty. When you and say that those are your business expenses, no. Custom duty 120,000, 1,120,000, 1,120,000. Those ones they are not allowed. Custom duty, VAT, those are not allowed. Come to bad debts written off, those are allowable, unless when they are general. Salaries and wages is allowed. Audit and accountancy allowed. General expenses are not allowed. General expenses, we only allow specific, but general expenses have already been captured. General expenses, they were captured here. They are those which were allowed, but the others were not allowed. We only allowed trade association. That one we had already dealt with that one. Water and electricity, depreciation is not allowed. It does not involve movement of cash. Depreciation does not involve the movement of cash. It's not allowed. How much is the depreciation here? 1,520,000. 1,520,000. We go back to our statement and look for more non-allowable expenses. Advertisement allowed. Purchase of computer software not allowed. Purchases are not supposed to come into. Purchase of computer software. This one is not allowed. 350,000. This one is not allowed. We go to where we reach. Purchase of computers, transfer to general reserve. How do you cannot transfer money from your business to general reserve and claim it's an expense. That one is not possible. Transfer to general reserves. Transfers to general reserve. This one is not allowed. 2,480,000. That is not allowed. You can't transfer money from your business to general reserve and claim it's an expense. Then rent arrears allowed. Amortization of goodwill. That one is not allowed. Goodwill does not involve the movement of cash. Amortization of goodwill is not allowed. How much is this? 250,000. Then we have what other expense? Yeah. Stationery and printing allowed. Legal fee has been utilized in additional information. So we have captured all non-allowable expenses. So we add them and bring them back so that we can now compute the correct adjusted net income. Let me pick my calculator here so that we can now move and find. Here we have 240,000 plus 2,080,000 plus 400,000 plus 230,000 plus 115,000 plus 1,120,000 plus 1,520,000 plus 350,000 plus 2,480,000 plus 1,250,000. Here we have 9,785,000. So here we shall have adjusted net profit. Adjusted net profit. Take the loss which you had here, reported loss, 210,000. So adjusted net profit is 8 million. This is 8 million. This is 8,575,000. We go to less non-business income. Less non-business income. Non-business income. Income, but it's not. So here we have gain on sale. Gain on sale of van. It has been indicated here. Here it has been indicated here. Where is it? Here, gain on sale of van, 400,000. This does not involve movement of cash. Gain and sale of van, which is 400,000. 400,000. We less this. And then here we shall have our net profit as what? This is 8,175,000. Now, computation tax. How do you find corporate tax? Is that percent. So tax payable will be 30% times 8,175,000. 8 minus 400,000 here, 175 times 0.3. So the tax here is 2,452. 2,452,500. So that is it. That's how you are to score the 20 marks here, and you have answered that question successfully. We meet in our next video.